Hi guys, a very good morning. Today is a big one. Today is not a weekly expiry, it is the monthly expiry. The whole July series, the heaviest OI of the month, settles today. And here is what we are walking into. So, yesterday the market ran straight up to 24,000, tapped 24,011, and closed 23,995. 4 points under the round number on the biggest single strike on the board. And look at what happened around it. Crude, the number that ran this whole story, is still falling near 87,000 $87 this morning, down from 100 a week ago. The fear gauge, the India VIX, is asleep at 12.6, and the option chain, the put sellers, are stacked underneath us like a floor. Every one of these things say the same thing: buy the dips, buy the dips. This is the Tanmay Edge. You are listening to episode 90. I am Tanmay Kurtkoti. Let's go. Yesterday's card, and it was a clean one, guys. We scored almost 4.5 out of 5. Full scorecard is available on rupeecase.com. You can visit and check it out. Monday was a proper up day. Nifty closed at 23,995, up 228 points, almost a percent. Sensex 76,835, up 777 points, better than a percent. And the internals were even stronger than the headline. Breadth was a Thursday. 43 stocks up, only 7 down inside the Nifty 50. And the smaller companies did even better. Mid caps were up, small caps were up more than a percent. All the 11 sectors closed in green, led by IT, up more than 2%, and media. And the fear gauge, India VIX crashed to 12.6, down almost 10% as the bounce got confirmed. The combination price up and fear down hard on the breath. Is the tape telling you that sellers are done for now? Is it true? Let's check it out. On a normal weekly expiry, guys, the open interest is quite thin. On a monthly expiry, it is 3 to 4 times heavier. So these levels pull much harder, and the numbers are stacked exactly what where we want. Max pain, the price that hurts most option buyers, sit is exactly at 24,000. The PCR is at 1.13, above 1, which means more puts than calls on the board, and this is supportive as it tells you a bullish view. There are 20 crore puts open against 1.17.7 crore calls. Underneath us, the put sellers built a support. 24,000 itself holds more than a 1.5 crore puts. 23,900 holds 1.3 crore puts. These are the writers saying they do not expect a breakdown. They will get paid if we hold 24,000. Above us, it is the resistance is 24,200, the single heaviest call in the line at about 1.5 crore. Then 24,100 is between that. And here is the pocket that matters, guys. Between 24,000 and 24,200, the strike 24,150 almost empty. So keep a good watch on it. So we expect something different over there. So we hold 23,900 and reclaim 24,50. There is a very little thin weight up to 24,150, and that is exactly where the monthly settlement can drift and settle into. So keep a watch on 24,150 strike, guys. One more number seals the tone. The straddle is trading at 126. That means the market is pricing a move of almost one standard deviation of 140 to 150 points. Tiny on a pinned low wall monthly expiry, the buyers of the option bleed and the sellers get paid. Yesterday, the official participant file showed one thing that was clear: de risk into the expiry. The professional desks booked profit on the calls they had been long. The foreign desks also bought back the calls they were short. So they stopped defending the downside so hard. And the retail crowd covered more on their put side that I was waiting for. So nobody is pressing a big directional bet into the monthly expiry with Fed uh, getting their policy numbers tomorrow. That is the market that wants a pin and no one wants to run up. But that is what is going to happen, or is it not? So the overnight board keeps the tailwind. Crude is still sliding, Brent near 87 this morning, and that keeps the pressure off the rupee, which is firm near 95.91, best in the last 1 week. Gold east, the dollar index is flat at 101.5. America was quiet. The futures close to flat. Europe closed green yesterday. Asia is quiet this morning. Hong Kong is green. Nothing that changes our story. And our own screen gift nifty is trading near 23,977. pointing to a flat open right under 24,000. So we start the monthly expiry sitting on the pin. So the plan is clear, and it has one line under it and one line over it. The line under it is 23,900. That is where the put sellers have built their support, and that is the dip I want to buy. As long as we hold 23,900, the structure stays bullish, and this monthly can drift up to 24,100 to 150 immediately, right into the empty pocket between the walls. Buy the dips towards that 24,000 and 23,900. Do not chase the strength into 24,200. The line is 24,200. That is the heaviest call wall, the resistance, and I fade the first tap of it unless it is taken on the close. Lose that 23,900, guys, and hold below it, and only then does the pin break and it slips towards that 23,780 to 23,800 levels. That is where the expiry can again happen today on a lower end. Now, how do you one express that on expiry day matters more than usual? So this is the education for today, guys. On a monthly expiry with the wall gauge this low and the straddle only at 126, you do not want to be a buyer of options. Time decay and the falling wall eat a naked call or a put alive. Even if you get the direction right, the structure that fits a pin to be a seller, and do not uh, do it with a spread. So your risk is capped. Selling an in the money call spread or an in the money put spread works perfectly on these days, because that is where you will get paid for the width of the strike. That is the expiry day edge, guys. Stick to 1:1 call or put in the money spreads, being the seller of premium, not the buyer. One caveat, and it is important: the Fed decides tomorrow, guys. So the wall gauge will not fully collapse today, and it would be normal into an expiry. Between there is known event on the other side, keeping some premium in the price. Do not sell so much of premium that a Fed surprise tomorrow hurts you. Keep it defined, and the premiums are low, so don't sell a lot. Quick note on the all cap book, guys. Monday was the day the equal weight book finally shown, up 1.31% against Nifty 0.99, beating the index on the board on an up day, the exact mirror of the risk of days it gave back more. Since the rebalance, it is now level with its benchmark. DR cabs is up more than 25% since that rebalance. Car trade jumped 12% on Monday alone. 50 equal weight names doing their job. Over its life, the book compounds at about 44% annually. Not a call to buy anything, just a machine doing its book. Next rebalance is on 3rd August. You can go on rupeecase.com and check it out. The traders who win consistently are not smarter, they got earlier, and you just got earlier, guys. Have a great expiry. It is the monthly max pin sits at 24,000. Remember it, and the whole board says pin. So the pin can happen very easily. Buy the dips towards 23,900, hold it, and can settle upwards towards 24,000. And if it breaks 2450, we are going to look at 24,150 and 200 as the expiry. Be the seller of the premium with a spread, not a buyer, and keep some room for the Fed tomorrow. This was the Tanmay Edge. If you found value in this, guys, please share it with one trader friend who needs it right now. Subscribe on Apple Podcast, Spotify, and listen it live on rupeecase.com, where it streams first. And give it a rating, guys, and a review if you want to add something to this podcast. See you all once again tomorrow.